am here with Guilhem from Flowdesk, and it's been a relatively quiet Bitcoin week. Most of the action was in DeFi and Compound, but we're all looking forward to the CME expiry tomorrow, and would love to get your thoughts on that as well as the market overall.
Yeah, totally. Thank you so much for having me. It's always a pleasure to be with you guys. So before we dive into CME, there are a few figures I wanted to share with you today. The first one is about the overall realized versus implied volatility that we have on the markets. Just to mention and highlight that we've gone back actually to new all-time lows almost in terms of implied vol. So that's very far from what we had back in March. So we are looking at more or less 60% implied volatility versus 40% realized volatility. And it's normal to have this kind of spreads in non-volatile markets. The second figure I wanted to share with you is another interesting one. I think it's about the BTC versus the BTC Call versus put ratios, where we've had like some very interesting months, I believe. We've gone from a ratio of 0.4 to 0.8 right before the halving. So 0.8 means that we had 80% of calls by notional versus 20% of puts. And then it's been only going down since. And now we are again below the 50% threshold. So it's really interesting because all the excitement about the halving is now gone, I guess. And in terms of price, from the BTC perspective, we are still at relatively high level. So what is going to happen next is going to be very determinant. And I think this is a very good key insight about what could happen next.
And what do you think that will happen next?
I mean, my belief, it's always been, hovering around the 50% area, historically speaking. So it's very rare actually to see deviate from it. So I think if we have a quiet summer in the equity market and the traditional markets, which I think is quite unlikely, but if we have a relatively quiet summer, it could be very likely that we stay in these areas. And then if markets start to become volatile again, like BTC drops, to the 8K area, I think that there is a good chance that this number will go down again, maybe, to the 30% area. And if it goes up, it's a number that is highly correlated with the market in general. So it could go up, it could go down. I think it would really follow Bitcoin's price.
Mm-hmm. So what about the CME expiry?
So so what is happening right now on CME is extremely interesting, and it's quite a first thing we are seeing right now since a few weeks, especially if we look at the open interest. This number is really stunning to see how these volumes have literally exploded in the past weeks. So right now, CME have about 40K BTC of open interest, 200K BTC in total. So we're looking about 20% market share, more or less, and it's growing very, very fast. I remember we've seen like a few days ago, around 4,000 BTC worth of puts being traded in 2 trades. So just for the premium itself, we are looking at a 40 to 50 BTC premium, assuming 60% implied volatility. So there is really something happening, I think, here. For the first time, particularly in the derivatives market, we are seeing a huge interest for traditional venues like CMEs, and it's happening fast. That is also the thing. It's happening really, really fast.
Do you think that's because institutionals feel more comfortable with CME and that since Paul Tudor Jones bought through there, that's what's happening now?
I think that could explain it totally. I think also there is, now the COVID-19 crisis is done. So we've all seen what happened on the markets, whether it's equity, crypto, lots of volatility. And probably, the players are trying to find some diversified exposure. So probably trying to get into Bitcoin as a hedge against the traditional markets, although we know it's far from being the case because of the correlation. And that typically leads me to the next slide, where we can dive into the breakdown of the options that are traded right now on CME. And it is also quite interesting to see that we have 8 times more calls that are being traded than puts. So really what's happening on CME right now, it's not people hedging Bitcoin with Bitcoin options. It's people who want to get long on Bitcoin with significant notionals, probably also as a hedge, but a hedge of the traditional markets, not the cryptocurrency itself. And I think this is quite also fascinating to see that we are looking, at out of the money options with 1 week expiry, 2 weeks expiry options that are 20%, 25, 30% out of the money. So really we have an anticipation of a big moves. At least that's what they are betting on. And we really see how that turns out. But I think that this end of the week will be extremely volatile. In general, in total, we have about 150K of BTC expiring if we include derivatives. As far as I remember, this is the highest levels we've ever seen. So that will add a lot of volatility, definitely, and very excited to see how it turns out.
That's great. Do you think that the movement in DeFi that we're seeing has any impact on this?
Yeah, of course it has, because it's giving a lot of public image to the cryptocurrencies in general, and I mean, often derivatives have been the easiest way for institutionals to get their hands on the markets. So I mean, today if you have a typical institutionals who want to dive into decentralized finance, that could be complicated. They would need to understand how it works and so on. And derivatives are basically the easiest ways to get exposure to these markets indirectly. So I think obviously all of this is correlated, and extremely excited to see how it will turn out in the next weeks, whether or not we will keep this level of open interest, what will be the overall market share of options versus futures, and all that.
Great. So you'll have to come back and tell us how it turned out in a few weeks.
Yeah, we'll definitely do.
Thanks so much for being with us today.
Thank you.